Back in June, our next guest double upgraded Best Buy, raising his price target from $67 to $100 a share. He cited a post-pandemic replacement cycle and new AI gadgets as catalysts for a similar sales inflection. Best Buy shares surging past 100 to 101.30 on their best day since 2020 following an earnings beat, which management attributed to tech replacement and AI products. But same-store sales still haven't turned positive. They have narrowed the negativity, but not in positive territory just yet. Here to discuss the beat and the outlook for the consumer is Stephen Zaccone, retail analyst at Citi. Stephen, welcome. Good to have you with us. Well, you nailed Best Buy. Congratulations on that. You saw it coming. It's a replacement cycle for what? Is it laptops? Is it appliances? All of the above? What?
Yeah, thanks, Tyler, for having me on. I think it's laptops and tablets. That's first and foremost, right? We bought a lot of technology during the initial phase of the pandemic, right? You go back to that nesting period where all were working from home. You know, you're starting to see the consumer come back, needing to upgrade that equipment. On top of that, you're finally getting some newness from the manufacturers now that's sprinkling into the assortment. That's still very small. That should scale as we move forward into the back half of the year and more meaningfully over the next couple of years. So it's a really attractive path here for people to come back and upgrade some of the electronics equipment they have. There's still areas where you're challenged, right? That's on the TV side and on the appliances side. That hopefully gets better over the next couple of years, but it seems like the stock has enough with tablets and computers to see some improvement here in the same-store sales trend.
And when you say we're seeing some newness in this refresh cycle, I assume you mean that some of these tablets and some of these laptops are equipped with AI features that weren't in a prior generation of product.
Yeah, it's a great follow-up from your last segment there because you are seeing some AI newness that rolling into Best Buy. The thing is, it's very small as a percentage of the assortment, right? So it's going to grow over time. And if you think about the consumer, you know, you're probably seeing the early adopters who are purchasing an AI-influenced PC, but that will grow over time as some of the price points start to come down. You start to see more mass adoption. We're all eagerly awaiting the launch of what Apple has to say in a couple weeks. You know, maybe we finally get some upgrades on some mobile phones. The consumer has definitely been using that mobile phone for longer. That's been quite a theme. So Best Buy did talk about that on the call. That could be a nice catalyst for them as you think about the back half of the year.
Talk to us a little bit about that back half of the year, and let's chew on the one thing that was maybe still a little bit you could quarrel with it, and that is same-store sales. They were still negative, but not as negative as they had been.
Yeah, and I mean, retail has been a minefield this earnings season, right? You mentioned some other stocks that are down a lot today. And I think with Best Buy, what's unique is they're kind of bucking the macro trend because you've got some catalysts to see innovation. You've got some catalysts of replacement cycle. So they're really doing well in the landscape of a weakening consumer backdrop. So it's been pretty encouraging. So yeah, comps aren't positive, but you've had 2 months in a row now where comps have been flat. Arguably, comparisons get easier into the next couple of months and then into the fourth quarter. So you've got a catalyst path here where comps could get back to positive. Now, they're mindful of the uncertainty that comes from the election. They're mindful of the uncertainty that comes from a shortened holiday calendar, right? We've got fewer days between Thanksgiving and Christmas, which has been talked about by a lot of retail. But I would say, you know, they feel like we're moving in the right direction. This year was a year of stabilization. Next year is probably a year where you start to see the category return to growth. Very interesting.
I'm looking at some of the numbers here on Citi's credit card spending data, which is always interesting to jump into. The total spending was down 4% versus the prior week, down 3.8% when you exclude food. Is that worrisome at all, or is it just sort of seasonal noise?
You know, the theme has been a weakening consumer landscape, right? Like we've seen that across a lot of retail this earnings season. We've heard about it sequentially from the spring into the summer. So I think it's out there, right? And as we go into the back half of the year, you know, we still have the election distraction, what that does to the consumer spending on big ticket durable goods. But you've got to pick your categories where you're starting to see some growth. Consumer electronics gives you that. You know, we've been weak for 12 quarters almost in a row where we've seen comp declines at a Best Buy. So you're starting to inflect to positive. You know, we cover the home improvement landscape. That's another one where we've been weak for 2 years, and maybe we're starting to see a pivot to growth as rates start to come down. So I think you've really got to pick your categories where that where that pivot to growth is starting to happen.
Stephen, thank you for being with us. Would you go and maybe see if you can assist that fine gentleman who's sitting behind you? He looks perplexed. He was sitting there with his hand on his mouth.
Take a look.
So take a look. He looks like a nice guy. He's working hard there. Stephen, we thank you. Appreciate it.
We'll get him in order. Thank you.
Get him in order. Yeah, that's right. Have a good Labor Day weekend, man.